Welcome to the Winnie Podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacy.
Hey, welcome in, everybody. We are back for another session, and I like the subject that we're going to talk about, and it's the lies we tell ourselves when it comes to money and ourselves, and some of the top reasons why people end up terminating their life insurance contract.
Yeah, this could get to be a deep subject because we're going to talk about the lie that I'll save whenever I make more money. Insurance is too expensive, and that having a lot of debt is normal. This is going to be a good conversation.
Well, the lies we end up sort of buying into as it relates to our money, some of it is that we don't actually take enough time to really understand the truth about our financial environment that we're in. If we sat with ourselves and said, how much time have I actually really taken to get clear about what's actually taking place or around me, what I've surrounded myself with, and how much do I actually understand about what's going on? And I think the truth of it is that most of us operate like we're reacting rather than being proactive. I think there's not to say that there's not a good portion of us that do our best to think about these things and plan around these things. But how much time do you actually take to execute on the things that you think about, the things that you think are great ideas? How much time do you really take to execute on following through on those things that you think are good ideas? I think the first lie that we have around ourselves is how dedicated and how committed am I to really being great with money? On a scale of 1 to 10, what does that look like, really? Am I super committed, or am I just like, I've got too many things to worry about?
Yeah. So the analogy that I used just this week when speaking with the client is if our child is on the other side of a crevice in the mountain and we have to jump to save them, to save their life, would we do that? Absolutely, we would. I challenged these clients with, how bad do you want freedom and control in your finances? Is it like your child is sitting on the other side and it's up to us to make that decision? How honest are we with ourselves about how we treat our money? And what are we willing to do in order to get freedom in those finances? Because let's face it, finances are a huge part of our lives. They're not going away. And so we can either be proactive and be a good steward of the money that we're given, so that we can experience freedom in that, or we can not be good stewards and not be responsible. And then you have to suffer through the stress that causes. I mean, to me, it's not worth it.
I would say coming back around to things, Nelson always talked about the fact that there is a lot of lies in the marketplace. Number one, I think the first lie is thinking that everyone else is responsible for our lot in life. Oh, I can't trust anybody. There's so many scam artists there. There's too many opinions out there. Therefore, none of it is valid. But also, taking the time to gain financial clarity does take a certain amount of stepping back. It takes a certain level of mental organization that is required to actually get clear about our finances. If you're mentally disorganized, that's probably one of the first reasons that causes a lot of confusion, or that creates a gap between you and feeling great with money, is your ability to mentally organize yourself. And also to realize too, what is going to be true for me that's going to lead me down a path that I feel that I can be great with money. Nelson talked about recognizing the lies. And sometimes even in the Canadian marketplace, I truly think that the RRSPs and the TFSAs and things like that, I think they should be renamed. I even think like term insurance should be renamed. Term
To
insurance
death
should be called death insurance, because then people would have a lot more clarity that there would actually be no living benefit except for the peace of mind that you get making sure you take care of your obligations that include your family or includes your debt. But it only pays out upon death. I think it should be relabeled, honestly.
Yeah.
The next piece is like registered retirement savings plan. The name is a lie, in my opinion. It should be registered retirement investing plan, because that's more truthful, because you have to invest in order for it to grow,
Right.
which therefore negates the fact that it's really a true savings plan. Because if you're putting your savings at risk, it could grow, and that's what you hope for, but it's not guaranteed.
So recognizing the lies that are out there, because there is so much information out there, and we're constantly forced to filter all of the information that we take in a day. I mean, you can turn your phone on and go onto a social media platform, and within a matter of seconds, you have been exposed to an unreal amount of information. So our brains are filtering all of that. We need to be super diligent in filtering out what resonates with us and what doesn't, and recognize what are lies and what are truths.
Do you actually know whether you have values around money? What are your principles around money? Do they actually really align clearly with the things that you are invested with? Do they align with how you manage your cash flow? Oh, I want to be free, and I want to be independent, and I want to feel like I have more than enough money. And I want to make sure that I can do what I want to do whenever I want to do it, and not have anyone tell me I can't. I don't want to be limited. And yet, maybe perhaps what your money and what you're doing with your money and the decisions you make around your money do the exact opposite.
I think that comes back to the course that you and your daughter offer, and we walked through that exercise of recognizing what your relationship with money is and what has formed that. What actions over the course of your life have made your relationship with money what it is today. And I think that was really a really good exercise to walk through, because for me, I came out on the other side like, okay, I can see things that have shaped who I am and my relationship with money. And I can pick out the good parts of that and the bad parts, or not necessarily bad, but parts that maybe I want to leave behind. And it's not always easy. I mean, in this conversation with the clients this week, it wasn't an easy conversation for them, because they are in a point in their life where finances are stressful. But we're working toward getting to a place where they can sense that freedom on the other side. So you do have to walk through the valley to get to the mountaintop.
Lacy, you're really starting to recognize, because you're close to your 5-year mark in this business now. For me, it's coming on 15 plus years. And, so I have clients that are, definitely 10 plus years into this whole process. And maintaining the lifestyle of being your own banker, like practicing the infinite banking concept, no matter what you choose as your financial lifestyle, it requires work. No different than, hey, you want to be a good Christian. You don't just make a decision to be a good Christian one day and then that's it. You're a good Christian for the rest of your life. It's a process. Yeah. It's no different this way too. You choose this lifestyle and it takes work. And you know what the challenges are? The things that we have to really come to recognize that impact our ability to be great with money, again, is not only our mental organization, but it is our emotional health. Pretty much almost every single financial decision we make is not all based on logic. It's actually quite emotional. It's recognizing what it's attached to, because you could recognize, okay, yeah, the infinite banking lifestyle and the mindset behind it and the philosophy and the principles that allow a person to become sovereign, honestly, is clear. However, if you are also feeling impatient and you're in the middle of your 50s or you're closer to your 60s and you don't feel like you have enough money for when you would like to retire, that emotion in and of itself, like that fear of not having enough, can really play with your decision-making process, Because if you're only like 10 years in, 11 years in, and depending on how you've been treating your policies, you might feel like this isn't fast enough. This isn't going fast enough for me. Like I feel like I don't have enough to retire on. Then that might make you feel like you want to terminate your policies, like you've been doing the wrong thing, which kind of leads into a part of the two different topics today, like the lies that we tell ourselves, but also reasons why you might have in the past or reasons why you might think of terminating your life insurance policy.
If we're experiencing some stress in our finances, then we can tend to think, okay, well, the insurance is something I could eliminate from my expense. So let's get rid of that. But what are you signing up for risk-wise when you're terminating those policies just to free up that monthly cash there?
To invest.
to invest, and then it's, all subject to the market. So I would do a lot of things before I canceled my insurance policies. I know that much. Maybe when you've been faced with a situation where your life insurance policy might actually have to pay out to your family, it's easier to be like, okay, this is one reason why we have this. It's not too expensive in my mind.
So this is where mental organization really matters too. Like, yes, there's a lot of things that we're bombarded with, but when we can make it a priority to stay clear about the path that we're on, it makes it easy to eliminate a lot of the financial noise that is out there. But what does make it difficult, and I have empathy for those that have to encounter it, it's like, okay, well, maybe you're our clients and you understand the infinite banking concept, but you also don't have a lot of people in your community maybe that are practicing it. Or maybe you have like a really close friend or a family member that just signed up to be an advisor and don't share the same philosophy. Maybe they're on the exact opposite spectrum where it's like, no, they don't believe in permanent insurance. They believe in getting term insurance, which again, we talked about earlier on in this episode, where we believe it should be renamed as death insurance, and just get the death insurance because it's a little cheaper, and then just invest the rest so that you feel like you're going to have enough, more than enough in retirement. What are you really signing up for when you do that? Now, is it that we're the bad guys? It's like breaking up with a philosophy and you're trying to tell your advisor like, oh yeah, no, I am not making as much money as I used to. I don't think I have enough for retirement. I just don't see the growth in this. When we make a case to say, okay, well, you've now built in 10 plus years of momentum. It's like building any business. So if you're okay with walking away with 10 plus years of momentum, just understand you're never going to get back the same. Like if you wanted to get back in, it's not going to be the same because now you're older and you may not even qualify.
Yeah. And that's a whole other subject too, is even qualifying for insurance.
Yes. And even just to say, hey, look, I have forgotten the whole reason why I'm doing in this first place. And I've also forgotten how these policies work. It's funny because it doesn't matter how often we can meet with clients. If you're only using us to sit here and remind you about what this is about, it's not going to be enough. I'll tell you that right now. If you haven't picked up the book and read or listened to the truth in the heart of what this actually solves, this is not an investment. It's not to be compared to an investment.
That was on my mind this morning too, actually, when I was meeting with the client who their main goal is to eliminate the need for any lending from the traditional bank. And he is heavily involved in his policies, looking at the values, making plans. How can I do this? How can I do that? It's going to be this many years until I don't have to borrow from the bank. But he truly, truly wants it. Then we started to talk about rate of return. Somebody was asking him, like, okay, I know you're doing this, but what's your rate of return? And I said, this is what the next time they ask you, you should tell them this. Nelson would say it's not about the rate of return. And if you want to figure it out, I'll give you the formula. It's how close are you to age 100? When does the actuary think you're going to die? And what's the guaranteed rate of the general fund of the life company? Here you go, figure it out. And he just started giggling because he understands that it's not about the rate of return. And I said, I'll even send you that verbiage for next time that question comes up, and you can pull it up on your phone and say, this is, if you want to figure out the rate of return of your insurance policy, here's the formula. Have fun.
Yeah. I mean, the bigger picture is this, is that can you even consider the possibility that our need for investing, what is that rooted from? What does that stem from? It's because we have so much financial headwind that we need to deal with on a day-to-day basis.
Yeah.
So if your debt is owned by someone else other than yourself, then if you're not able to pay off your credit card or your loan your credit card at the prescribed time, then you're paying interest to someone else. But if you're also a person paying in cash, this is also an interesting lie that I think people tell themselves, yeah, no, I'm totally good. The only debt I have is to my mortgage. So I don't have any I don't have any debts, just my mortgage. So, that's fine. Well, lo and behold, you lose the biggest, you could have the best percentage rate of a mortgage. Maybe you only have 2%, let's just say, that's crazy, or 3% or 4% as a rate that's charged by the mortgage. But it's no big deal because that's just normal. Well, you have a choice now. You actually have a choice through understanding what the infinite banking concept really is. The heart and the truth of it is that our need to grow our money and invest our money is simply because we're in a financial environment in which it's hard for you not only to keep your money, that's the biggest thing, because every day we spend money.
Yeah.
It either
every
automatically...
time you leave the house, it's $100. That's what I say.
Yeah.
Minimum $100.
Yeah. And then money leaves our bank accounts through our credit card automatically, or through your bank account automatically through pre-authorized payments. But if you're paying for things in cash, you are also losing the ability to grow your money. You're losing the opportunity cost to ever grow your money again. So then you have to go earn it. The lie is that you just don't understand how money works. How you are spending and saving money and where you're doing it is what actually matters. And it's the difference between desperately needing to grow your money in investments versus not. And being able to maintain your understanding of that comes from the dedication that you have towards how you want to live your life.
I think it's important to note too, with all the noise on social media, I mean, be careful who you're taking advice from, because there's people who have no sort of financial certification or education or licensing, and they're giving financial advice. It's, to me, that's risky. Be mindful. Be mindful of that. Do your due diligence, do your research, because there's just too much noise out there, in my opinion. Find somebody who you trust, who you can build that relationship with, and, go with your gut and don't listen to the noise after you find your path. The other distraction, when we get distracted, we're like, okay, we're going down this path, and then, oh, shoot, well, maybe this path's better. No, this path. You just lose so much momentum when you do that too.
I mean, it's no different. I think it is just honestly our ability to also be super real with ourselves is hard at the best of times. I could just tell that one of the clients that I've had for a long time, it was just I know she wanted to pin it on me, that it was oh, I'm just I know she tried to abdicate her role in her responsibility for where she's at with her finances, right? Instead of just saying, look, I'm just feeling really impatient. I feel like I'm just feeling a lot of fear around not feeling like I'm gaining enough traction with retirement. I've been looking into other avenues around, I think I'd rather just take the money that I'm spending annually or to putting into my policies, and I'd rather invest it. Rather than saying that, she would be like, I just don't have enough. I just don't have enough money. Without going into so many details, I just knew that was the heart of what was going on, rather than her being just real. It's like, okay, we can address this. If you really want to, I'm not here to stop you. I mean, you're at the driver's seat. If you want to terminate your policies right before they're hitting their milestones and you want to kill that 10 plus years momentum, it doesn't hurt me. It only hurts you. And she's not even insurable anymore.
That's something that has come up quite a few times for our practice over the past couple of years is insurability. And I feel like it's taken for granted. And I don't know that you can really get somebody to understand that until they're faced with a no.
This goes to say maybe this is off topic a little bit for today, but I mean, dealing with a couple right now where they did show us what they were offered before from a different life company, probably about 5 years back, right? It was just a simple term in critical illness coverage that they were offered. Wife still insurable, husband recently experienced stage 3 melanoma and is not insurable at this very moment and may not be for another 5 years or so. She could have just taken the offer because there was no exclusions on her. He declined the whole thing because he was miffed that he got an exclusion for like cat skiing.
Yeah, our emotions play a huge part in our decision making. So how would I think back, okay, how would we handle that situation? We would for sure talk them through that. And I don't know what advisor they had or if they tried to talk them through it or not, but that's unfortunate for sure.
That was just an exclusion on the life insurance side. That wasn't even on the critical illness side. Had he taken the policy, there's a good chance he could have been paid out on that. Good chance.
Good chance. Yeah.
Yeah.
So yeah, this is a good episode today. The lies that we tell ourselves around money and how to sift through it and find the truth and find your path. So really good chat, Winnie.
Well, I guess we're done talking about it then.
Yeah. So you know what to do. Something that's really exciting is that we have the audiobook out now. It was released. So as of this recording date, it's been out 1 week. So head over to rancherway.com. You're going to actually get the paper copy that's sitting behind me and the audiobook in a bundle. So you can listen to it in the tractor, the feed truck, whatever it may be, on the back of your horse. There's no more excuses. You can find us on YouTube, Spotify, iHeartRadio, and Apple Podcasts. Thanks, guys.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.